Hello, everybody. Welcome to the Fundamental Analysis webinar. My name is Troy. I'm a Senior Account Manager with AvaTrade. I'll be leading the session this afternoon. As we get going, let's do a quick systems check. Type OK in the chat box if you would, if you're hearing me clearly and seeing my screen all right. All right, great. Thank you. I've got enough responses. Looks like we're up and running fine. If anyone runs into any issues as we go along, just let me know. As always, keep in mind that all investments have risk, including trading on FX, CFDs, spread betting, options trading. No one trade is guaranteed to bring profits. I think we all understand that. And so obviously the other side of going after potential profits is managing risk in some way that makes sense, whether you're using stop loss marks or potential hedge trades that you might set up to cover risk. Or there's actually a unique feature with our AvaGo mobile app. If you haven't downloaded our AvaGo mobile app onto your mobile device or devices, I would recommend that you do. Just check it out. You might like the features that are on it. There's one feature in particular, as long as we're talking about risk, called AvaProtect, which helps you protect against risk for defined time periods for a small premium cost. And so it's a unique way to protect against risk for these defined periods. And it might fit into some strategies, especially where you expect high volatility maybe on the market. So it's a tool that you could use at your leisure while using the AvaGo app. It's available on gold, silver, FX pairings, and could work into a trading strategy potentially, depending on your style of trading and your style of risk management. Now, keep in mind what we cover through the webinars is not meant to be financial advisement, but should be taken from an educational perspective. Now, as we start to talk about fundamental analysis, we always point out that there are two main types of fundamental analysis that we do, or types of fundamental news that we can use within our trading strategies. And so one type would be regular economic events, like earnings numbers releases, and economic numbers being released, like factory production numbers, PMI numbers, unemployment reports. These things are regular economic events that are scheduled at specific days and times that we know in advance what they'll be about and when they'll be. So that's one type of fundamental analysis, and maybe that type is a little easier to plan for in terms of scope and timing. Another type of fundamental news is what we might refer to as extraordinary economic events, and that would be the sorts of things we've been dealing with quite a bit this year, whether it be trade war stuff between U.S. and China, whether it's into last year, Brexit news that was breaking unexpectedly at different times, and now most recently news about the pandemic and vaccine hopes and outbreaks. These sorts of headlines, we just don't know what they'll be exactly or when they'll be. And so that's another type of fundamental news that you might think is harder to be prepared for, but you actually can prepare for those within trading strategies as well. And we'll talk a bit about that as we go along. Let me just type a quick message because I have someone saying they don't have audio. Okay, so just letting that person know. Oh, okay, so your audio's up and running, great. Okay, so if you have any questions as we go along, please feel free to ask. If you want to give input, suggestions, add to the conversation, please, again, at any time, feel free to do so in the chat box, and I'm happy to share information and input as well with others. Now, as we get going, we were talking a bit about risk as we started. So the AvaGo mobile app, AvaTrade Go, you just go on our main website, trading platforms, AvaTrade Go. You can download it from the main app stores, the Apple App Store, the Google Play Store, onto your mobile devices. And it's got a lot of nice features that are updated, that it calculates your margin requirements for you. It calculates your potential profit and potential loss to your stop loss and take profit marks. If you program them in, it converts it to your account currency as well automatically. Many of the assets have AvaProtect as an option that you see here as an example. You pick the time period, there's a small premium cost. Any losses during those time periods that are covered are added back to your account if the movement goes the wrong direction. So really nice tools available on the AvaGo app. If you haven't checked it out, you probably should. Yeah, we'll take a look at oil. Sure. Ruben, no problem. We can take a look at oil. And yeah, the number of barrels on the market is playing a role, that's for sure, with the oil prices maybe having trouble staying up. But we'll take a look at what oil's doing and maybe work a plan that you might like potentially. All right, so Tesla's another hot one. Yeah, Jack, we can take a look at Tesla. No problem. So stock futures rise as recovery hopes offset virus fears. Boy, we keep seeing this. This is a repetitive pattern. You keep seeing headlines, like the latest headline out of the US was US sets record for daily new virus cases. It was like 77,000 new cases in one day. And you think, wow, the markets are going to crash. And then you see the markets go up more and you see the headlines, you know, the futures are rising, recovery hopes are offsetting virus fears. Boy, that keeps happening. This is a repetitive thing here. So the recovery hopes, they're talking about economic recovery, meaning hopes that as the quarantines have been lifted, that jobs are coming back, that spending will increase again, etc. And so there's still a lot of optimism out there, even with these huge outbreaks still occurring with this virus. And part of that, as we were reading earlier in the week, is related to the hopes for a vaccine soon. There's been a lot of positive developments with vaccines. So, you know, it's a sight to see everyone wearing masks on Wall Street and other financial sectors at the same time that they're buying things up and the markets are rising. So something maybe we never thought we'd see in our lifetimes. Now, virus surges, work hours plateau, US may be flattening the wrong curve. Okay, that's not such a positive headline. You know, you want to flatten the curve of the number of new virus cases, meaning slow the increase in new cases and eventually decrease the number of cases that are new each day. And instead, what they're pointing out here is there's been a plateau or a flattening out of the increased number of hours that people are working. And, you know, whether anyone's reading much into that part of things, I don't know. It seems not, because the markets appear to be ready for, you know, a little bit of green movement again, according to the futures today. Something to keep in mind, still tension between China and the US, the number one and the number two economies in the world in terms of size, still bickering, still kind of tit for tat back and forth, trying to antagonize each other a little bit and show each other maybe who's in charge, that sort of thing going on. So that's something to keep an eye on, that those types of tensions between two economic superpowers and, you know, some would say two military superpowers, that's something that could affect markets, but right now doesn't seem to be. But it's always there that you could have a breaking headline that could go bad about something like that. Now, as we look at economic announcements that came in today, not much happening. Pretty much everything came in as expected, all through the European Union. Construction output increasing, but not so much that it's listed here as better than expected. CPI numbers improving compared to the amount of increase in the prior numbers. And so we are seeing exactly what some of those headlines are saying, that there's some positive sentiment there about the numbers, that there's an economic recovery trying to happen. Type OK if you're hearing me clearly. Okay, David, I think you need to fix the audio on your side. Okay, I've got a large number of people. Thank you. I've got enough responses. I've got a large number of people saying the audio is just fine. So please check on your side if the audio is not working for you. All right, great. Thank you, everybody. All right, so we do have some economic numbers coming in out of the US here in about 20 minutes, a little less than 20 minutes. And these could move the markets a bit too. So if there's already positive sentiment, how do we know there's positive sentiment? Futures are green. We see that here. Volatility index is down over 3%. Okay, the VIX index, referred to as the fear index, sometimes it shows that if volatility and fear are down, which is what this is showing, and the futures are green, which is what we see here, that's a sign of positive sentiment. So it fits the headlines we just looked at about the markets kind of ignoring this virus outbreak getting worse and positive sentiment still being there. Okay, so if we get good numbers here out of the US, better than expected numbers, and out of Canada, that could add to the rally today. Okay, it could add to the positive momentum. It also could be the opposite. These numbers could come in red, worse than expected, and you could see a big swing in momentum. So we have to prepare for that, knowing that this type of fundamental news is coming in less than 20 minutes. And it'll happen while we're doing the webinar. So we'll take a look. If I forget to look back, please remind me. We'll take a look at these numbers and see what's happening around that time. Okay, keep in mind it is earnings season. All right, and Bank of America reported yesterday. Okay, we see here July 16th, better than expected numbers. Again, adding to the optimism that's out there. Now, those better than expected numbers aren't great numbers. The expectations were down somewhat because of the pandemic. So, you know, the earnings per share, while they were better than the expectation, they weren't as good as the prior quarter. So keep that in mind. Better than expected doesn't mean really good news necessarily when the expectations are low. But we did see numbers come in the green for earnings per share, for revenue for Bank of America, albeit tempered results because they were lower than the prior quarters. Okay, for both of those numbers, revenue and earnings per share. So after those numbers came in, Bank of America took a little bit of a hit on the charts. We can take a look at it, but they seem to have kind of leveled off. And maybe this optimism will help out that stock as well as others potentially. Now, if you're looking to trade on some of these stocks around the earnings numbers, and again, this is a type of fundamental news, scheduled events. You can see on our website, it's easy to find under trading info, earnings releases, all the assets that we offer, we have the earnings releases here, the stocks. Okay, the earnings numbers, we list the date that they already came out or that they will be coming out. All right. So, you know, you've got Amazon coming later this month, some big companies, tech companies that will be reporting numbers. We've got Google, otherwise referred to as Alphabet Incorporated, etc. And Bank of America, we just looked at. Okay, so that's something else you can utilize to trade before announcements. If you think, in this case, earnings numbers should be good, maybe for someone like Amazon, who does online sales, right? During the pandemic, some of these companies did really well because everyone was at home ordering things online. So Alibaba, Amazon, while other companies were hurting, were really doing well these past months. So it's something to consider. Keep track of some companies that you know their name brands, you trust in them, and maybe you feel have a bit of predictability take a look at when their earnings reports are. And you only need a couple that you start to research a bit and have an idea about, and you can trade prior to the earnings releases. You can wait until they come out. Like we just looked at Bank of America and get an idea of what do you think is going to happen next, because you look at the numbers that just came out. Let's jump on my demo account here and we'll look. Here's Bank of America. There's crude oil. We'll come back to that. Here's Bank of America. So it's been choppy, right? This week, look at the gaps. Bank of America gapped down, Bank of America gapped up, Bank of America gapped down, and now what's going to happen today, right? If that pattern continues, maybe it gaps up because it's been gapping down, then up, gapping down. What's next? And you know, when we talk about a gap on the charts, we're talking about a difference in price between the closing price from the prior day and the opening price of the new day. And why does that happen on our stocks in particular? It's because our stocks are traded not on futures, which are traded 24 hours a day, but traded on only during the market hours of where those stocks are from. So in Bank of America's example, they're only traded and moving on the chart during US trading hours, more 9:30 a.m. New York time until late afternoon New York time. And so that's where you see this chart moving. And so when the market opens in New York in let's say an hour and 15 minutes, you'll see the opening price of Bank of America show up, and then it starts moving. What if this opening price starts to go back into this gap between here and here? What happens many times if a movement starts to re-enter a gap, and that gap being right about there? If the movement opens into this old gap from this week, it might fill the gap. Exactly. And why, if when the US market opens in an hour and 15 minutes, if you see the the Bank of America price somewhere up here, okay, if you see it open up here into this gap, why might you trust that it would fill the gap also? What did we see on the futures is happening right now? Fundamentally speaking, do we have positive sentiment or negative sentiment on the markets right now? Yeah, positive. It could change, right? But right now, we got to go with what we know. And what we know is the futures are green, fear is down, the volatility index is down over 3%, and things seem positive today with the headlines. And so you might anticipate a take profit at the top of the gap. If the movement opens positively and enters this gap, you could do a market buy and have your take profit just before the top of the gap. It would be a great fundamental move. And technically speaking, it's a nice technical move in terms of technical analysis with the whole idea of filling the gap type strategy. Once a movement enters a gap, the next resistance level isn't until the top of the gap, because there's nothing else there within that gap. It's an empty space. And so it doesn't work every time, but it works a lot of times. We've been seeing it with oil, which we'll take a look at in a minute. Someone was requesting that we look at oil, and we would look at oil anyways, but we'll take a look at that, and we'll look at an old gap from oil that really has played well and still could. So I see Bank of America setting up nice. And by the way, if you haven't checked out our MT5 platform, a lot of the traders with AvaTrade have MT4 accounts. We also offer the MT5 platform. You can log into your client area and add an MT5 account to your existing user account anytime. We have something like 200 more stocks available on MT5 that have been added recently. All kinds of name brands and maybe names of companies you haven't heard of even. In addition to the large amount of stocks that are on the MT4, there are even more on the MT5 platform. Okay, I could show you real quick, and all these publicly traded companies, they all have earnings releases. They all have fundamental news that you can use quarterly. Okay, some people trade only stocks using this valuable fundamental news, yeah, we can look at some currency pairs using this valuable fundamental news to help drive their strategy. So if you haven't looked, let me show you real quick. If you go to our financial instruments, go to the page where it shows everything you can trade on with us. You can see here as you go to stocks, okay, the ones that just are listed like this, they're available on MT4 and MT5. As you go to the 6th or 7th page of stocks, and by the way, that's an amazing thing that we have 6, 7 pages of stocks on the MT4, but as you get to the 7th page or the 8th page maybe, you start to see there are stocks that say MT5. So over 8 pages of stocks or 8 pages of stocks on the MT4, and then you see MT5 on the rest. From page 8 all the way through page 61, 61 pages of individual stocks. These were added as additional assets on the MT5. Tons and tons of stocks that are only on the MT5. So those of you that are into trading stocks or want to get into trading stocks, MT5 could be a solution for a large number of stocks if you're interested in that route, okay? All right, so with that said, let's take a look at the trading platform. And so we looked at Bank of America. Let's go to oil. Where is it? Here it is, crude oil. Okay, so I set up on Monday this week, we were looking at the resistance line at the top of this gap on the one-day candles. Remember when oil was first crashing months back, it gapped down like $10 through one weekend. From Friday's close to Monday's open, it had this huge gap and oil just kept crashing, okay, during the pandemic and during kind of a price war between the OPEC nations and Russia. Well, that's been settled quite a bit. Economies have been opening back up. Vaccine hopes are out there, and so oil recovered quite a bit. But look at this resistance here. Resistance, back down. Resistance, back down. It's right at the resistance again. If I draw a line at this resistance, look what that corresponds to. It's the top of the gap from just before that big crash. So we've been looking for weeks at, you know, as the movement entered the gap on the bottom, buying on oil, and as it hit the top of the gap, selling on oil. As it hit the bottom of the gap, buying on oil. As it hit the top of the gap, selling on oil, etc. And it's worked very well over the past month. Okay, now we see it's just stuck at the resistance level. It's really stuck there. It's trying to find a reason to break this resistance. And so what kind of pending order did I put up here Monday? And it didn't activate yet. I didn't lose. Oil didn't break the resistance yet. But we didn't lose with that pending order. It's still waiting for good news to make oil break that resistance. When it breaks that resistance, and eventually it will, what kind of pending order then can buy with that momentum with the take profit up here? That's exactly what I have set up. And it tells you here, buy stop, right? So I've got a buy stop pending order, and that's what this one is here, buy stop crude oil. I already have it prepared. You might like a different price, but the idea is to have the entry point above the resistance, meaning you'll only buy if there's enough positive news for oil that it breaks that resistance level, the top of that gap. Because the last time it was above that gap, where's the next resistance level? It's way up here, okay? And that might not look real far on the chart, okay? From this green line as an entry on a buy stop, taking profit here, but that's like $7 per barrel rise. So, you know, you have a one lot position up there or something, or whatever trade size is right for you. $7 per barrel can pay quite well. And it's a simple pending order with a very little risk. I put my stop loss back down here, half the distance of my potential profit to the first resistance level. So I'm willing to risk half of what my potential profit is going back up. Why did I put my stop loss down here? So it's below that resistance level, because once it breaks above it, the idea is whatever positive news caused oil to break through the top of that gap, it should also keep it from coming back below it, hopefully, right? That's the concept, technically speaking, of that setup. And so remember I said there's two types of fundamental news, and one of them is a type that you can't predict what it will be or when it will be. What do you think would happen to the price of oil if they said US and China reach phase 2 trade deal? What do you think would happen if OPEC said, hey, we're cutting production another X million barrels per month? What if some type of unexpected fundamental news came out that was really good for oil prices, right? That's what could happen. It could go up. So you always have to remember there are two types of fundamental news. One is the news that we know, right? We know what it'll be, when it's scheduled, like the Bank of America earnings numbers. We just talked about Bank of America. We devised a strategy around what we already know about Bank of America's earnings release, about the sentiment on the market right now. We're looking at the gap that exists on that chart for Bank of America and saying, hey, I'll watch the market here in an hour when the US market opens, and if it gets into that gap, I'll buy. Maybe that's your plan. And that's based on news you already know. This plan right here is based on the other type of fundamental news, the news I don't know, and there's no way I could know when a breaking story that might be positive for oil may or may not hit. But I'm prepared for it. I refer to this as putting trip lines in the market. I put a trip line there that if the market crosses my path, boom, it triggers my trade and away it goes. And I'm assuming if it hits that trip line, well, there must have been some kind of unexpected fundamental news that caused oil to break through that level and pierce the top of that gap. In which case I'm riding the wave, hopefully, up to the next resistance level. Okay. All right, Peter, no problem. And by the way, that's good for everybody to understand. You can't always catch the live sessions on the webinars, or you can't stay for the whole thing. They're all recorded. They're uploaded to our YouTube channel by the next business day. So today's session will be uploaded by sometime Monday. And you can look at the past days and weeks sessions as well for repetition on strategy concepts, even if the movements aren't relevant anymore at any time. They're all recorded and uploaded. Okay, Peter. All right. Have a good weekend. All right. So good question. Finesh is asking, how long do you keep your buy stop up there? It's up to each individual trader, right? I'm keeping it up there till it breaks the resistance, because I believe within my strategy that the only way it's going to break the top of that resistance is if there's some powerful news that's good for oil prices. And by good, I mean that would cause oil prices to go up. You know, for the average consumer, good oil prices are low oil prices. Then you fill up your gas tank a lot cheaper. So it's all relative as to what we mean by news that's good for oil prices. But in terms of news that's good for causing oil prices to go up is what I'm talking about here. I think it'll happen eventually. I don't know when, but when it happens, I've got a trip line ready to buy. And maybe it'll go up, trigger my trade, and come right back down and hit my stop loss. I'm okay with that. I'm okay with that. That happens on occasion. That's part of your risk management. And you could even have a hedge trade below it instead of a stop loss, that sort of thing. It's up to your concept. But usually when a major resistance level gets broken, you see some type of large response, momentum from whatever caused it to break. Okay, many times you see that. So let's take a look then at Tesla. That was requested as well. We're seeing huge momentum out of Tesla. We see a pullback this week after the huge momentum. So those of you that are Tesla fans, you've got an opportunity for a nice entry point if you believe Tesla should keep rising with the positive momentum. And you know, if we go to say 4-hour candles, this is a nice little support level. Okay, let me show you on Tesla. resistance. These are 4-hour candles. So this is a pretty significant support / resistance level. You see resistance, resistance. You see the breakthrough candle here, larger than the prior candles, showing it took momentum to get past this line. And then you see it became support, 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 support. So as the US market opens, if Tesla is still teetering above this support level, I don't see why, from a technical and fundamental standpoint, you can't take a market opportunity for a potential profit. And here's the ceiling, the recent ceiling, that type of potential profit with, if you're buying, with your potential loss just below that support resistance level being a pretty small risk. Okay, so those of you asking for Tesla, I think it looks beautiful, technically speaking, depending where the price is when the US market opens in 30 minutes. This looks like a nice technical setup, and it fits the fundamentals here. If you believe there's positive momentum for Tesla, along with the rest of the market, to take a shot at a potential buy up to the next resistance level or higher, and only have to risk a small amount to get below this support level. It's a really nice setup after this pullback that's occurred, Wednesday, Thursday, Friday this week. It's a really nice setup, technically speaking and fundamentally. Good question. I have someone asking, what's a hedge trade? And so let me give you an example. Let's find something that's moving right now, like GBP USD. Okay, let's say I like this support level on GBP USD here. Okay, it was resistance, it became support, 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 and now it's getting near the support level right here. Okay, so let's say my plan is, and let's go to 1-hour candles. Let's say my plan is to buy on GBP USD. Now, I don't like the exact entry point now because it's still downtrending. Okay, so I'm not saying you should buy on GBP USD necessarily, but let's, for example's sake, I'm going to go ahead and buy on GBP USD. So let's say I take a 0.3 trade size, or whatever trade size would be right for your balance, and I take a buy position. And I say, you know what? I think it could break below this level, but in the bigger picture, maybe I believe the pound will climb. And so I go to maybe 4-hour candles and I say, okay, if this movement reaches this level, let's say, if it breaks down to this level, yeah, I'm using MetaTrader 4, Manny. So if I, in the bigger picture, believe the pound would rise, and it's just an example here. If I believe the pound will rise against the USD, but I also believe in the shorter picture, it might drop, but I don't want to give up on it if it drops a little bit. I don't want to give up on it. So what do? If I put a stop loss, I give up on it. If, overnight it hits my stop loss, and then I wake up in the morning and it went up exactly how I expected, I'll be mad because I wanted to keep it open and it hit my stop loss, and then it went the right way. So how do you prevent that from happening? Where I can see this is dropping, but in my bigger picture mind, I might think I still believe it'll go up. So instead of putting a stop loss, maybe down here, what kind of pending order could I put that if it dropped further, I would break even by opening? What type of pending order would act to hedge my buy position? And I'll show you. If I set up a sell stop, correct. Some of you are already saying sell stop. A sell stop sells from a lower point. So if I say, if this price hits 124.93, that I want to cover any further loss by hedging. So I could say 1.2493, same trade size if I want to fully hedge. And by the way, there's no margin requirement for that to hedge. You just can't be a negative free margin. You have to be 100% margin level percentage or higher, and you can fully hedge any trade that's running without any margin cost. And so 0.3 to fully hedge this. And by the way, you could partially hedge, could cover half the risk. And in which case I would only prepare a sell stop for 0.15, half of the trade size. But here's a full hedge, and I might put the stop loss on my hedge, because if I believe in the bigger picture in the upward movement more than the downward, I'd say, okay, if it does hit my hedge and keeps dropping, I break even. I'm covered on my risk from that point on. If it hits my hedge and then goes back up, I want to close the hedge trade and keep my original trade open if that's the one I believe in more. So then my stop loss would be put on the hedge trade, not on my original market move. So if it comes back up to, let's say, 125.35, then I have a stop loss on the hedge trade. Okay, so there's my hedge. Now I'm fully hedged once it reaches that point. Now you have to make sure that with the trade size you put and the distance to where you start to cover yourself with the hedge position, that you're okay with that risk. Okay, that's your risk level. From the entry of your market buy in this example to where your sell stop would open, you're getting further in the hole until the sell stop opens to cover you. But then you're fully hedged at that point. Your only cost then is overnight interest if you're holding it for days and days or weeks or longer. So it's a way to cover yourself, to be able to be patient, not get to the situation where it hits your stop loss and then goes the right way and you miss the movement. So it's an example of a way to cover risk management without using a stop loss on your initial move. Good question. Someone's asking if I personally, or if in general traders should have specific distances to your stop loss, to your take profit, and the answer is it depends on your trading strategy, right? If you have a certain amount that you're willing to risk per move, right? And you find a price level that you think is the right spot to put your stop loss or to start hedging based on support and resistance levels, let's say. So that distance is determined by the chart. Now you better pick the right trade size so that distance of pips is equal to the amount you're willing to risk, right? If I'm trading on gold and I have to put my stop loss down $10 to get below a support level or to get above a resistance level for my stop loss, and I only want to risk $100, right? If I know my distance to my stop loss should be, based on the technical analysis, $10 away in the price of gold, and I only want to risk 100, then my trade size better only be 10 ounces. 10 ounces, $10 away in the price to my stop loss would risk 100. Okay, so the distance to your stop loss can vary based on what the chart shows you. The chart many times should determine the distance to your stop loss, and then you can determine your trade size to make sure you have the right exposure. Other traders will just say, no, I don't care what the chart shows. My stop loss is always X distance away and my take profit is always X distance or Y distance away. And that's okay too. I'm not here to say one strategy is wrong or better than another, but the idea in the webinar is to understand how to do the strategy. That if you want to calculate exposure, that you better know how to do it. If you want to find a price level that we're calling a support level or a resistance level, you better know how to find them, what they are. Or if you want to be able to hedge a position, you should understand what that means. And so that's what we're covering here. Okay, so in this example I gave you, I'm in the buy position on GBP USD. Okay, that, by the way, I really didn't like the entry point because it was downtrending and I bought. But as an example, yes, I'm in on the market move. Then I can hedge it with a pending order. If it hits the pending order, it opens the hedge. Okay, so in this example, it's a market move backed up with a hedge position as a pending order. The pending order is not in the market yet. It didn't open. And your hope is it'll never open. The hedge is there as a risk management tool just in case it goes the wrong way. And you're hoping the hedge position never opens. You're hoping it goes the right way. Okay? All right, and by the way, what's been happening with the USD in the bigger picture when there's positive news on the market? what's been happening to the US dollar index? Let's take a look. Okay, it's down, right? Dollar index down 0.29%. The dollar has been viewed as somewhat of a safe haven during the pandemic. And so as there's good news on the market, the US dollar has tended to weaken back down as people are leaving the safe havens and going back into the riskier assets like stocks and indices and such. Okay, so that's another sign of positive momentum is fear is down and the dollar index is dropping while the futures are green. And so when we're looking at this chart, that's another reason why eventually, if this hits the support level and starts to show some uptrending, why the GBP USD might make sense fundamentally to buy on. And then have your stop loss or your hedge position in a place that makes sense for risk management. Now, obviously, you better know a little something about what's happening in Great Britain as well, because the other side of the equation of the US dollar weakening is, well, what's the pound doing? Okay, you always have to know both sides. Okay, so we could take a look at gold real quick, and then I think we'll call it a day. Let's see what's happening with gold. And we look at the 1 hour candles and we say, wow, gold is climbing when there's economic optimism. And gold has been acting the opposite of what you might think ever since the pandemic happened. We've been watching it week in and week out in the webinars when there's dropping fear on the market, and you would think gold should drop because fear is dropping. The fear index is down over 3%, and look, gold's climbing. Say, why is gold climbing when there's less fear on the market? Isn't gold a safe haven? Why is it going up when there's optimism on the markets? And that has been the case ever since the pandemic hit. And part of the explanation by some of the experts out there has been that when the fear gets too high, gold investors actually start to cash in gold, which drives the price down with too much fear because they want cash in hand. They want the liquidity. And so people buy gold when there's fear because it's a safe haven. But then when there's so much fear that there could be a total collapse of the economy, that type of fear can lead to the opposite effect, where gold prices drop as gold investors want to get cash in hand to be ready for maybe an economic crash of some kind. So that's one explanation anyways. The other explanation would be, what's gold paired against here? If the USD is weakening, makes sense, gold could climb easier. US dollar is weakening, the gold here is paired against the US dollar and it's climbing. But there's more to it than that, because we have gold paired against the euro and it's also climbing. So interesting that with optimism, gold has been climbing of late, and with economic pessimism, gold has been pushing down somewhat. Whatever the case may be about reasons, this is what we see. And so we all day long could have been taking advantage of gold climbing in response to this potential optimism that's been occurring. Emmanuel, you can catch the recording of today's session by Monday on our YouTube channel under the English webinar section. You'll see the title, Fundamental Analysis of Live Market Action, same title that you registered for. You'll see the date and the recording to be able to catch it. All right, let's take a look at the numbers that came in. Someone just mentioned, thank you for reminding me. Let's refresh the page, and what happened with the numbers that came in. So this was just today, a little bit ago. Building permits up less than expected, but they are up more than the prior month or the prior announcement. So building permits are up, but less than expected. That's kind of bad news, right? And then housing starts are up more than expected. So less building permits, but more housing starts. So housing starts means where the construction actually started. Building permits is the process before that happens. So, right now the housing starts better than expected and growing. Building permits up, but not up as much as expected. Not horrible news. Certainly not horrible news. Decent news. And we look in Canada, and that was nowhere near. Wholesale sales up, but not anywhere near expectation. So the rate of increase of recovery in the economy seems to be slowing a little bit. All right, so those are the latest numbers that just came out. Kind of mixed, not blow away spectacular numbers, not horrible numbers. Increases occurring in housing numbers, housing starts, building permits, and wholesale sales out of Canada, but not the increase maybe that was expected. And so as we then go to gold, maybe that helps gold have a reversal. There's a resistance level. Here's resistance, resistance. So let's say you think gold should pull back now because we've got the opposite type of sentiment starting. It wasn't great news with those numbers just now. So maybe I say, okay, I'm going to sell on gold. And with a bit of simple technical analysis, here's the resistance level. Last time it was at this price, it plunged. So I'll just put my stop loss above that price, take a small risk and a much larger potential profit if it pulls back down. So maybe I'd say, okay, I'll put my take profit just before this support level down here, 1797, let's say. And this is just an example. 1797, and my stop loss above this resistance, maybe 1808. Okay, so there we are. So I've got a risk from my entry point here of about 1/5 or 1/6 of the potential profit to my take profit down here. Okay, my take profit is strategically placed above a major support level, and my entry point is strategically placed just below a major resistance level, and I'm going in the direction that I think the fundamental news might make sense. Okay, not the greatest momentum booster with those numbers that just came out, and since it's been bizarro world with gold, and those numbers were not as good as expected, then maybe if the markets are going to pull back a little, maybe the USD will strengthen again then with a little more fear and help to pull gold back down a little today. Okay, just combining a little bit of fundamental news, a little bit of analysis of the pattern we've seen in the past months with gold and good and bad news, and taking a shot at a move. Now, if you're a scalper, you could already take profit, right? This Great Britain pound move, maybe eventually here it'll bounce, right? But it was more of an example than anything of how to hedge. It wasn't really an optimal entry point, as I said before I opened it. This gold move to me, though, makes sense, and the entry point makes sense with this type of move. Nice resistance level. Maybe the fundamental news is on your side for a pullback here on gold, and the support level makes sense for location of take profit, technically speaking. Okay, so specifically, when should you enter the market? Someone's asking. Depends on the asset, and it depends on your strategy, right? I think the gold move makes sense fundamentally and technically right now. I think Bank of America makes sense now. Once the U.S. market opens here in about 40 minutes or so, to take a look at that and look at that gap and see if you want to trade it. I think the pending order on oil makes sense above the resistance. Okay, and there's no reason why you can't take a market move on oil as well. What do you think oil is going to do if the sentiment is fading right now? Okay, we go to 4-hour candles. Here's that resistance level up here that I drew for oil. So even with a buy stop above the resistance, there's no reason why you couldn't say, okay, if it breaks the resistance, I'll buy. But right now, I think the sentiment is turning negative, so let me sell on oil. I can have a buy stop prepared and at the same time sell on a market sell, because it's two different things. Right now, I might sell on oil because of the current swing in maybe market conditions that maybe you feel could happen today, with the latest news not being that great. And then also be prepared for the unexpected type of news that could cause oil to go up and break the resistance. So I've got my buy stop ready up here above the resistance. I have a market sell, and maybe my stop loss is just above this resistance level. So if oil hits 42, maybe I'm out on my sell. So then I just come here, I say modify, stop loss 42. There. Now I have a small risk on oil to my stop loss. And my take profit, maybe I'll put at the first support level here, 39.5. Okay, just an example of using fundamental news that just came out, not as good as expected for some of those announcements out of Canada and the US. That can be enough to swing momentum, at least in the short term. So now I take a market move on oil, which is just below a major resistance level. So technically speaking, it's a nice move. I'm trying to combine that with fundamentals that just came out, and then I'm programming a stop loss that makes sense with small distance in terms of risk above the resistance, and my take profit being down around 39.5 as an example, because that is the first support level I think is significant technically speaking. So there we are. I've got a nice potential profit that could come on oil, a nice potential profit that could come on gold. And, I got out on the GBP one because I didn't like the setup anyways. It was an example. So maybe you took a small loss on that one, and now we're waiting things out for a much larger potential profit on the moves we really like. Okay? And I say we, in the end, you have to like. You have to like the moves. And so these are some examples of things you might look at. If you like the fundamentals and the technical setup, you can take your shot. Okay? And again, once the US market opens, take a look at some of these stocks. Bank of America, Disney, some others. The news is, even with all these outbreaks in Florida, Disney's opening things up. They're going to maybe larger capacity and letting more people in. So just when you think something like Disney might drop because of more outbreaks in Florida, there's news that could cause the opposite, right? So have your eye on the US market and some of these stocks when it opens, and jump on the movements that confirm maybe what you think. All right, everybody, thank you for joining. We'll be back at it on Monday. Good luck with your trading today. I think there'll be some nice movements, especially as the US market opens. And I wish you all great profits. All right, you're welcome, everybody. Thanks. Bye for now.